Welcome. In this video, we will see if Xcn coin is ready for the rise. Don't forget to like and subscribe to the video, and please watch to the end to understand. When we look at the market from a long-term perspective, we can see that price movements are shaped by certain trends. In particular, the downtrend, which we're focusing on right now, continues to be a strong pressure on the price. Looking at the chart, we can see that the price has touched this trend line several times, and each time it has moved downwards from this level. This suggests that investors have not yet been able to generate enough buying power above the downtrend, and sellers are still influential in the market. However, a deeper look at the current picture also gives us strong signals that if the price breaks this trend, a new bullish wave could begin. First of all, the fact that the downtrend is still valid is a very critical issue in terms of investor psychology in the market, because price movements below the trend cause many market participants to act cautiously and take selling positions instead of waiting for a rise. However, what matters in such cases is when the price can break the downtrend and how strong this breakout will be. If the price breaks above the downtrend decisively and on strong volume, this could be the start of a new bullish wave. As we often see in the market, the price movements after trend breakouts can often be fast and violent. This is because many traders follow such technical levels and turn to the buy side when the breakout occurs. Also, price action breaking a downtrend is often seen as an important signal for a new trend reversal, at which point bullish momentum can accelerate as buyers enter the market. While this downtrend is likely to continue to suppress the price for a while, it has recently been seen that the price has been approaching the trend line, increasing the probability of a breakout. The critical point here is how the price will react after hitting the trend line. If strong buyers come into play at this level and a breakout with volume occurs, then we can see the beginning of a strong uptrend in the coming period. And if this trend breaks and retests on it, it will offer confidence to investors and we can see a better rise. Looking carefully at the chart, we observe that a very important technical pattern is in the process of formation. We have an inverse shoulder head and shoulders pattern, and if this pattern is completed, we will see that the price could make a strong move to the upside. This pattern is known as a very strong reversal pattern in technical analysis, and is often considered as a harbinger that long-standing downtrends may end and turn into an uptrend. The fact that the price is currently in the process of forming the last shoulder area suggests that the pattern is very close to completion. This means that if the pattern is successfully completed and a breakout above the neckline occurs, a serious bull move could begin in the market. Let's analyze the process in more detail. The inverse shoulder head and shoulders pattern consists of three basic parts. First, the left shoulder forms, followed by a decline to the head zone. Then the price rebounds and starts the process of forming the right shoulder. This is exactly what's happening right now. That is, the price is forming the last shoulder, and once this process is complete, the possibility of an important breakout looms ahead. The most critical point here is whether the price can break the horizontal resistance level called the neckline. If the price breaks the neckline on strong volume, the Tobo pattern is activated, and according to the rules of technical analysis, the target of the pattern is set as a rise to the depth of the head. That is, the distance between the lowest point of the head and the neckline is measured and added to the breakout point to calculate the potential target area. Looking at the market from a general perspective, we can see that if this pattern is successfully completed, it could be a great opportunity for bullish traders. This is because the Tobo pattern has been a harbinger of big rallies many times in the past, and its technical targets can often reach quite high levels. Especially if a breakout comes, supported by an increase in volume, the chances are that this bullish breakout will be even stronger. We should wait for a breakout of the neck zone and watch for a bullish breakout. When we examine the basic principles of the Elliott wave theory, we see that price movements have a certain cycle, and that this cycle develops in certain phases. According to this theory, an uptrend usually consists of 5 main waves, and we are currently observing that the price is preparing for the third wave. First, the first wave represents the beginning of the uptrend. At this stage, much of the market is still undecided and most traders are unsure whether the price is entering a new uptrend. However, those who buy in this wave usually end up with the most advantageous positions. The first wave usually brings a medium-sized rise and starts to attract investors' attention. The second wave is a correction. After the initial rise, the market pulls back a bit with profit-taking, as some investors sell, thinking that the price won't rise any further. However, according to Elliott wave theory, the second wave never goes below the initial level of the first wave. At this point, the decline is just a temporary correction and gives strong signals that in the big picture, the uptrend will continue. And now we come to the most important point, the third wave. From a technical analysis perspective, the third wave is usually the strongest, fastest, and most profitable, because at this stage, the market is now convinced of the uptrend and more investors are joining the movement. During the third wave, the interest of both individual and institutional investors increases, and buying accelerates as the price rises. At this point, when Fibonacci levels are factored in, the usually yellowed and greened line levels of the third wave may be the first target points, but there is a good chance that the price action will turn into a broader uptrend. It should also be noted that the third wave is usually the one with the most volume and momentum. So why is this important? Because volume is one of the most important factors that determine the strength of a trend. If the trading volume increases as the price rises, this indicates that the rise is healthier and more sustainable. During the third wave, large buybacks combined with an increase in volume can cause the price to rise faster. When we look at the general investor psychology in the market, the third wave is usually seen as the stage when the most investors enter the market and big gains are made. This is because those who didn't trust the price movements in the first two waves realize that this rise is really strong in the third wave and start to join the market. This creates more demand and pushes the price even higher. The second wave can also be a bit of a horizontal price movement, so you need to be patient. The RSI indicator is one of the most important technical indicators that helps us understand momentum shifts in the market and whether the price is at overbought or oversold levels. The falling trend structure that is currently clearly visible on the chart shows that the RSI has been under downward pressure for a long time and has been influencing price action in this direction. However, breaking this downtrend in the RSI would be a critical development. Because in technical analysis, usually when the RSI breaks its downtrend, it results in the price also breaking its downtrend. So if the RSI can break this trend to the upside, this could herald an important transformation in price action. Especially when the RSI is under pressure for a long period of time, it signals a period of market consolidation. The fact that the RSI is heading toward the falling trend line and building stronger and stronger momentum as it approaches it signals that a breakout could be imminent. If this breakout occurs, it is very likely that strong buying will enter the market and a bullish move will gain momentum. If the RSI breaks this trend line, the price will break its own downtrend and we will see a nice rise. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.